Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Great to have you with us. Alex, Costa, Broker Daily Uncut. Unpacking, I guess, the events of the previous week and looking ahead a little bit. Getting a bit of an analysis on what's happening in the world of the lenders, looking at the marketplace, getting a sense of what's going on. I just feel we're in a very funny marketplace with interest, with the very, very brief reprieve with interest rates and then interest rates back on the move, heading north, looking like the last bit of data I read, there's potentially going to be another rise in May. I don't know if that's changed. What have you been hearing?
Yeah, I've been reading the same. I think they did a survey of the head economists of all the major banks, and basically all of them said they expect another rate rise. When, I don't know or am willing to predict, but they've all said that they're expecting one more before anything gets better.
Yeah, we've seen that, and banks have started moving fixed rate again.
Yeah.
Which is quite interesting. And we had two smaller banking institutions, I can't even remember the name, moving outside of cycle as well. They're variable rates to a lot more than 0.25%. So
actually, I think it was Brighton.
No, I can't remember. Maybe Brighton did too. But it's definitely on the way up.
Yeah.
That's where all the data is saying, yeah. Let's see.
It's an interesting market. There's, I guess, sort of a lack of visibility about where rates are going to go, but the upward cycle would appear to be, whether we've got another one or two rate hikes, really, really odd with such a small downward cycle. But in contrast, or I suppose maybe in unison, you've got a property market that is showing resilience. You've got clearance rates that are still fairly strong in all the capital cities. You've got Perth that just keeps marching forward, and you've got buyers, that are certainly have an appetite to buy. It's really interesting.
It's doing the opposite of what the economics is telling you that it should be doing. With inflation going up, interest rates going up, you would expect it to come down, but it's doing the total opposite. It's actually going higher and higher. So, yeah, it's just going to be interesting. I know we touched on it last week where the 11 rate rises and they still were going up. So I don't think one, maybe two is even going to do anything again. And the auction results show that again this week.
There's a lot of activities in regional markets as well.
Yeah.
They are growing quicker.
See,
and
I read a little bit
cheaper.
into that. And we'll maybe talk about that a little bit later, or to go into. But it seems very skewed with WA. It doesn't seem to be all regional markets. In fact, NSW seems to be not faring so well. So you've got this. Again, this brings me back to the really kind of quite odd landscape that we've got.
It's even Tasmania, I think, that's back up.
Yeah, a couple of buyers agents have been sort of dabbling in Tasmania. I've had one client looking in there. Their buyer's agent has taken in there. But, yeah, I feel like Tasmania is starting to be spoken about. I guess in the next 6 months we'll be able to see what happens there and if it does become another boom space.
You've got, you had fairly strong sort of auction volumes, reasonable clearance rates, nothing exceptional. Apart from Adelaide, 82%.
Yeah, Adelaide was impressive.
Sort of 68 in Melbourne, 67 in Sydney. But there are pockets. Look, there are pockets of every capital, whether for investors, whether for owner occs, that are moving well. Some of the suburbs in Sydney are sort of running pretty hot at the moment. You have obviously still got some areas affected by incentives for the first-time buyers. They're certainly looking at the marketplace, but investors are keen, and it does, sort of spark some curiosity from me, because you've got real pressure in terms of the government on doubling down on investors, all sorts of threats around, sort of tinkering with capital gains tax. You've got, sort of fairly punitive land taxes and all sorts of compliance issues if you go into certain markets like Victoria.
Yep.
But the appetite's just there for investors against all odds.
I think the pool of investors got bigger. Like when I started, it's like over 10 years ago, the investors I used to deal with were more like middle-aged people in good income, quite established already. And that was pretty much 90% of the investors I was dealing with. Now you've got kids that are like 20 years old. Mum and dad said, maybe I should invest, so I'm going for it. Or people that reinvest and push buying their home a lot later in life. Or I feel like the talk and the way people do things has changed, and the pool of investors is a lot bigger and starts a lot earlier.
It's kind of a cultural thing.
But that has changed. I'm sure it has.
Yeah.
I'd love to see data because my clients are completely different today than they were.
But you go back a
10 years
generation
ago.
and, my parents didn't talk about money. My parents wouldn't have a single conversation about money.
Yeah, but talking about it and doing things behind the door, maybe.
You've got a generation of people who've grown up where they're more open about talking about money, invest. My parents didn't invest. They worked hard, drew an income, paid their house off, and that was that. And money wasn't mentioned in our household.
Do you think the explosion of buyer's agents has helped
Yeah, probably.
so many people to start investing? Because
there's
When
Social
I was
media,
growing up-
social media clearly, like everyone's aware of it now.
when I was growing up, a buyer's agent was only for wealthy people. The people that, just don't have time and stuff like that. Whereas it's become so normal to get a buyer's agent, and they sort of cut out the risk factor to a point. Because if you don't know too much about investing, you go to a buyer's agent and they'll sort of...
I reckon let's get into it. We'll take a break because this is worth chatting about. I think people tuning in will have their own opinions, and maybe we've talked about this before, but it's probably worth. I think you're right. There's good and bad. We'll take a quick break. Back in a couple of minutes. Welcome back, Costa, Eva, Alex, Broker Daily Uncut. Not talking about anything to do with brokers at the moment. We're talking about buyers agents, but it does all feed back into the loop. Costa, raised, I think, a really valid point. Saying, has the rise of the buyer's agent been beneficial in, I guess, informing prospective investors that they can get in the market, that it isn't just for the elite? And I think you're right. But here's the thing. I think there's a general uplift, as you say, through social media. It's all over social media, and I didn't grow up with social media, and it's a recent thing for me. But now you've got a cohort of younger investors. Everybody wants to make money, and they want to make money quickly, and they want to do it with the minimum effort, and that's the way that the world is. And so I think, yes, you're quite correct. There's a general education amongst younger people that they can also benefit by getting the property market, but there's a lot of buyers agents that do not know what they're doing, that are not customer focused, and are just churning properties out, and that aren't particularly valuable to the people that are buying them. That's my take.
I agree with that. They're buddying up with developers and selling off properties because the developer can't sell it, and they're getting a cut from everyone. So I do agree with that. But yeah, there are also plenty of good ones who are actually doing the work on the ground, and the properties that they do give you are properties worth investing in. But yeah, you've got both sides of the situation.
It's everywhere.
It still comes back to buyer beware, and I think if you take, again, get into a whole side issue here, and this feeds back into mortgages, by the way, as well.
Yeah,
you get you'll get borrowers that will go, oh, I didn't know that I was getting out of my depth because it's the bank's fault because they lent me the money, or the broker's fault because they allowed me to have the loan. And that, we've obviously got best interest duty and many safeguards now to protect brokers, and lenders are a different ball game, but for brokers, you've got all sorts of things to make sure the brokers don't get dragged in. And this is I guess a sort of a social cultural thing, people taking ownership and responsibility of what they do. People look to blame anybody when things go wrong. They blame the broker often, sometimes, when things don't work out from a financing perspective. If you use a buyer's agent, do your homework, really check very carefully to make sure who's operating on your behalf is of the best quality. And secondly, it's your decision, You're the person that's making the purchase. You're the person that's choosing this buyer's agent, and have ownership in what you're doing. And I think a lot of people don't. They go, I'll get a buyer's agent. I'm now don't have any responsibility around the purchase, and it's the buyer's agent's fault because it's all gone wrong.
Yeah, buyer's agents might not be there in 5 years when the issue arises.
No.
It's a lot of there's a lot of them that come and go.
I'm selling a property now that I can't rent, that my buyer's agent that I've used a number of times before recommended, and I made the mistake of like not doing my own research and bought in an area, and I'm struggling to sell the house, and I can't rent the place. So I'm selling it just a year and a half after I bought it, But anyway, is it his fault or is it my fault for maybe, I said I want to buy in Melbourne. I've bought 4 places in Melbourne since, and I've actually used a property manager to buy. And they're, I'm getting 7% plus yields on those places. It's too early to know if there's been any capital growth, but they rent like dynamite. But again, that's my responsibility. I should have taken more of an interest. I went, okay, yeah, that'll do, bang,
Yeah, I think they should also have, just like we have brokers, a best interest duty to fill, whether it's something they have legally or not, because really they should say, well, we recommend this property over another one or this suburb or another one. They don't have that.
But you've got no leverage on them though. See, with brokers, you've got leverage because if you're governed by ASIC, and you're also a broker, because a broker is a broker and you're beholden to a lender. A lender won't deal with a broker if they even if they haven't been convicted, if lenders know that brokers are on the nose, they will not deal with them.
Correct.
You've got the aggregator, in most instances, or the franchise group that sits in the middle. There's a lot of support for the customer with the broker channel.
That's what I mean.
Buyers agents, there's no one to hold them to account.
That's what I mean. They should be.
They should be, but you've got no leverage because there isn't a third party at the other side. You've got a sales agent who doesn't give a stuff. They just want to sell the property. But they operate on behalf of the vendor.
But that's their job in the end.
That's their job.
They're not there to
Tell you
they're just
buy.
there to negotiate a price. If you want to purchase it or not, you've got to do your due diligence. You've got to do your building and pest and all that sort of stuff. And that falls on you. They're just there to sell it, and whatever happens after, well, it's not their problem ultimately.
No, there's no leverage, but this is the point. There's no leverage on the buyer's agent. But again, look, I'm sure plenty of people tuning in, have a relationship with buyer's agents. You've got to be careful as brokers about who you're lined up with. And I'll tell you, this is a big deal for, with the other hat that I wear in real estate, property managers are really, really, really copping the brunt from buyer's agents because guess what they do? They go along because they want a lot of them, they want to tart something up so it looks attractive to the buyer. So they'll go along and they'll go and pick the data that suits them to say upside in capital growth, action required, immediate action required. They'll go and get a property manager to do a rental appraisal. And they'll go, no, can you make it a bit higher? So then they go, well, but it's only worth to go. Well, they'll stick down that instead of being 480, that it's 530. So then the buyer goes, well, this all looks great. There's an X% capital uplift. There's a great yield. It's all ticking the boxes. They then go back to the property manager and go, great, like 530. And they go, I can only get you 480. And then the property manager cops it. They go, what? They don't blame the buyer's agent. They go, well, but no, it's a 530 property. So be careful. Be careful who you team up with. Be careful what you're recommending, and educate your borrower.
Well, interesting that you do bring that up. CBA have introduced a new policy. It was about 3.5 weeks ago, where all rental appraisals must have 3 comparables in it.
There you go.
So I think they're going to sort of close that door because they know what's going on. And you can't just say it's worth 530, but the market's telling you 480. If it is 530, well, show me it's worth 530. If not, well, then they're not going to go with it. So that's a way CBA are going to start sort of weeding that out. I would expect that to go through probably all the other lenders as well. Yeah, and it is a smart move. It makes sense.
It is a smart move. You've got to.
I'm going to get some pushback for sure because people are going to say, well, those properties that are comparables were rented 6 months ago. The market has moved.
If you want to game the system, you're going to game the system.
Yeah. So.
But it's like a real estate agent trying to value your property. They're going to give you comparables going, oh, your property's worth this because of X, Y, and Z.
But you look at Val. I mean, now the many different channels for sort of auto internet-based vals. And I'll tell you what I do. I'll look at an address and I'll go, what's the val on that? I'll look at domain. I'll go, no, I don't like the look of that. I'll see what REA says. Oh, that's higher.
It's better.
Or on the house. Oh, that's the best one. Yeah, I've decided that's what it's worth. That's what we do. And even though I know I'm kidding myself, I put it into my little spreadsheet to say how well I've done, or hide the dirty truths about portfolio. But this is what buyers agents will do. They'll go, well, we've got a they'll use the totality or the totality tool to get a val, or one of the various other ones. You guys use the same thing, I would assume.
Yep.
Property Hub.
Yeah, I think until you actually have one or two actual valuer going in the house, checking what's around and giving you a value based on what actually has sold.
But also, I was refinancing a purchase I made just before Christmas in Paran, which Rebecca is doing, and the bank val has come back way over what I bought it for. And this is actual
valuation,
yeah,
full valuation,
yeah. So
sometimes
happy days.
Sometimes it
I'll
is
take
what
that
it
one.
is, yeah.
And that's for a refi as well. So that means I can, if I choose to, I can refi at the higher val. But I did that once before, where I had another property in Engadine, and I got a massive bank val, and I refinanced it, and the place never went up. And then you end up selling. You get the you got the CGT based on that price, or sorry, you got the loan based on that price. It still went up, so I got CGT based on what I sold it for plus buying expense. I end up with no money back.
Yeah.
So you got to be careful. All right, let's go to a quick break there. Back in a couple of minutes. Welcome back. Eva, Costa, Alex with you. Broker Daily Uncut. Meandering around the world of property investment, mortgage lending, ethics in broking, goodness knows, gone everywhere. What's happening in the world of the lenders at the moment? We've sort of touched on a couple of things that some of the lenders are coming in with.
Yeah, well, we've had a lot of restricting policies coming in the last few months, but last week,
such as what? What are you
we know
seeing?
the trust and a lot of DTI issues with ASIC and all that. So it just felt like everything was getting harder and harder and harder. But I think we're going to start seeing the other side of that, where, for example, Westpac last week opened up their door again to 95% LVR for investors.
How long had that been withdrawn for?
I couldn't tell you. Quite a few years.
Yeah.
Yeah. Other majors did it.
So this comes back to where we started off. In you're looking at a marketplace where you got the Reserve Bank is increasing rates.
Yep.
You've got sort of fears around the economy, and yet you've got lenders that are looking at the investment market, and so they're obviously making a valuation on on the security of their loans, and they feel that the market, if you're lending at 95%, you feel there's good legs.
Yeah,
in
they're
the
taking
market.
the risk, right? So they obviously believe in what's coming.
But this is and it's important to remember this that banks don't lend money on assets they think are going to go backwards. Right?
No, 100%. That's true. And back to Eva, the 95% investment is only at P&I.
Yeah.
They don't do interest only. So
most lenders are like that. That's the other one that did it, and I think that's fair.
But if you can service a loan,
you can service a loan. That's fine. So it does open up some doors.
Can I ask a question? So is that with LMI? I assume with LMI, or do they have? What's the situation? What's the landscape with LMI these days? Because you've had these. Some lenders are taking loans out above 80% without LMI. You've got the government scheme. How many loans require LMI these days? Is it still the norm to have LMI?
Yeah, that's right. So unless you are part of those scheme, or the bank is doing an exception to get people in the door, the norm is if it's over 80%, you'd pay LMI. But that is, when you look at the opportunity cost of saving and saving and saving, and we mentioned that many times, the property that you're looking at that you want to buy is only going up in price, so you might as well pay the LMI.
Yeah.
And getting quick. So that, again, allow people to get in a lot quicker with 5%, which is not much. Most people could probably get 5% together. It will allow people also to go and build portfolio a lot quicker.
So then, you've got your 5%, then you've got to pay your LMI on top, and then you may have to pay a buyer's agent if you're an investor and you choose to use a buyer's agent. I don't know what percentage of the market uses buyer's agents. It's still not.
For the first property, maybe not, but for the second one.
Yeah. So rather than going, I'm gonna. The first place I bought, I saved the 20%. Well, I actually saved 10%. I bought off the plan, and then I sweated like mad for the next 18 months saving the other 10%. That's a long time ago. But now to be able to go in the market with a genuine 5% deposit, particularly if you got if you're going owner occupier and taking advantage of the government schemes. Yeah. And you pick carefully where you go, and you go, well, I'll buy what I can afford rather than maybe sort of where I'd love to live. then you can get in. You get moving.
I think that's great. That's showing that the big four, one of the big four anyway, back at it, just want to support.
What's the position with the other majors?
CB has always sort of done that. NAB, I think, and then Resimac, Pepper always did, the non-bank lender, but a very high interest rate. So you really paid for the premium. And some investors just don't want to do that. They want obviously wait until they can get okay-ish rate. So that is opening a door again.
Yeah,
and I
good.
think more will follow. More lenders will follow.
What kind of, and I know that you deal specifically or mainly with investors, and I realise that not everyone tuning in has the same marketplace, but what kind, and you'd said earlier in the show that you're seeing a lot of younger people coming in. If there's I'm going to ask you a difficult question. What kind of LVRs are you finding is the main area where your customers are they at that sort of real sharp end at 95, or is it 90, or is it 80?
No, I find like the first time investors would either go for the family pledge or at 90%. The one that would go at 95 are the real hungry, I want to get the portfolio quick.
Yeah.
And that's fine. And then they can get it now.
Yeah.
I think that's what it is.
Yeah, like I feel like around 90% is sort of where majority land. 95% are your real aggressive ones that just want the property because they see the value in it.
ASAP.
And this now opens up another door for them.
Yeah. That's interesting. And how about, just before we close off, we sort of touch on SMSF every now and again. What sort of activity are you seeing there? What sort of support from
there's
lenders?
there's more and more competition there. AMP came back in the game.
Yeah.
After, I think it's 2016, they stopped like years ago. They came back with a very conservative product, but very
how so?
competitive. So you need 300K minimum in the fund to start.
Okay.
Which most younger people
it takes a while to
wouldn't.
accumulate that.
Yeah, it would take quite a few years. So it's probably more like people, I'd say 50 and over, or people that had high income, all their life.
Good luck if you got it invested into shares, and mine seems to go down daily. Oh, it's fantastic.
Yeah, get it out properly. So that's one thing. It's 300K. They also need very clear, 2 years history of how much you contributed. Like it's not like other lender. Well, just give me a letter.
How are the rate? What's the rate?
The rates are sharp.
Are they good? Yeah.
They're
okay.
lower.
So they're conservative in terms of what they want in terms of your fund. But if you meet that criteria,
that's
the rates
right.
are good.
They've got an offset. But again, once you do buy, they also need a 10% liquid.
So there's a buffer for the...
So there's a lot there that you need to tick. And it's probably not for every investor, but somebody that had, that has worked all their life, maybe buying their first property, that would be ticked.
So I bought my SMSF recently, and I'd got a reasonable amount in my fund, and I liquidated enough to get the deposit. Yeah. I wish I'd just liquidate the whole lot, because what I got left, I thought, I'll keep that there as a little fund, because hopefully it'll go up. Yeah. It's gone down about 45%, and now I've got expenses coming through that I'm going to need to meet, and I'm going to have to sell. And every day I'll wait till tomorrow, and it goes down further anyway.
Wait for tomorrow.
I can't see anyone playing a violin here.
Yeah. So at least there's more coming, and again, a bank coming back in the SMSF space. It's
a good thing.
It's a good thing.
I'm dealing with someone now who will probably fit that criteria, and that will be good to take them to. It's definitely not going to be for everyone.
No.
Especially the younger people that just are maxed out in personal names, so they're now taken over to SMSF, and they've only got up like 180, 200, and they've just like, let's go for it. Yeah. They don't fit that criteria, but there are some out there that do fit that criteria, and you can give them that sharp interest rate.
Yeah, it's good.
Historically, you needed 200 to get started.
Yeah.
So 300, they're really like, okay, we really want the vanilla type of.
But that's good if you're a vanilla buyer.
And then they give you a good rate.
But if you've got accrued money in your SMSF, and you want to be conservative, and you go and maybe you're getting a lower LVR purchase, but with a sharp rate, then for some people they're going to go, okay,
totally,
I'm good to go.
No, definitely.
Yeah, I'm a classic. I never had any liquid funds in my SMSF. The moment any money turned up, I'll go, I'll see what shares I can find without doing any research, and I'll buy them, cross my fingers. Classic.
Typical investor.
I don't know if that's actually true. I can't. I'm more of a pokey player. I wouldn't actually call myself an investor. Investors suggest you do some sort of research. It's like the flashing lights is what draws me in. Anyway, enough about my misadventures in the investment market. Guys, thank you very much. Really appreciate you guys spending time. We're going to be bringing in I'm looking forward to bringing Julian Barnes in. So many of you who tune in will be familiar with Julian. He's a senior journalist on Broker Daily. He's been on Broker Daily for quite some time now. And he's going to be joining us for the podcast. He's going to be coming in from next week. So looking forward to having Julian on the show.
Great.
Looking forward to it.
Guys, thanks very much. For everyone else tuning in, wonderful. Thanks for spending time with us. Have a fantastic week. Keep the comments coming. We'll talk to you next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.